that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes.
The cryptocurrency market is a high-stakes roller coaster, a whirlwind of jaw-dropping surges, gut-wrenching corrections, and cycles that thrill and terrify even the bravest investors. But hidden in this storm is a phenomenon unlike any other: the banana zone. This electrifying phase of the crypto lifecycle is where fortunes are made or destroyed in the blink of an eye. It all begins with Bitcoin's meteoric rise, doubling its value almost overnight and luring in swarms of investors. Then comes the gut-punch correction, triggering panic in the unprepared. But for those who truly understand the rhythm of the market, this chaos is the golden hour, a land of unparalleled opportunity waiting to be seized. In a groundbreaking interview, Raoul decodes this phenomenon with razor-sharp precision. The banana zone doesn't just stop with Bitcoin, it triggers an explosive altcoin season, where even the most improbable investments suddenly seem like gold mines. Pal describes how this euphoric phase burns bright until spring, as gains pile up and wallets grow fat. But then, as the frenzy cools, a new chapter begins. Investors narrow their focus, chasing solid projects that will shape the market's future. The banana zone isn't just a phase, it's a proving ground. Those who understand its rhythms and seize its opportunities are the ones who rise above the noise. In crypto, the prepared thrive while the panicked fail. This isn't just another market cycle, it's a battleground of chaos and opportunity. But the question is, will you ride the wave or be swept away? Let's watch clips from Raoul Pal's explosive interview to gain more insight. Don't forget to like, subscribe, and enable notifications for additional in-depth content. Thanks for joining us again. Enjoy the video.
What is the banana singularity and why are we all saved?
Okay, so that is just the phases of how the banana zone tends to play out. You tend to get the first spurt. Bitcoin went from 50,000 to 100,000. It then corrects a bit. Everyone freaks out. I mean, it's ridiculous. I mean, it's literally ridiculous. The people freaking out from a correction like this. And then you usually get the alt season part. And that's when any moron can make money, including myself, in anything that you hold. And that is the alt season. That usually, in full throttle goes through till, let's say, April. And then it tends to get more selective in the final phase where they concentrate on the key themes. So everybody's asking about, I put a big thread about it yesterday. Has the market topped? What's going on? Is that M2 chart going to play out? Are we all Is it going down to 75,000? Yada, 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 yada. I mean, it's all day. And then it's like, oh my God, the Fed aren't going to cut rates. That's the end of the market. They can't, just so much noise. What I urge people, I wrote it, I think, in response to you, Ovi, is 2017-16 was a near identical setup. So the market has been following the pattern. But outside of that, Trump got elected. Everyone went, oh shit, tariffs. They're inflationary. The dollar screamed higher. Rates went higher. And then what happened was Trump came in and said, we need to get a lower dollar. Scott Bessent's already talked about it. The other guys coming in as the Economic Council guys already talked about the dollar being a problem. So I think they're using the dollar as the stick and will then offer it as the carrot to the Chinese, the Canadians, the Europeans, and everybody else, which is, if you agree a trade deal with us, we will help lower the dollar. The dollar is a function of liquidity, which is why rates are so bad as well. There's actually not enough liquidity in the system. And I think that's sort of somewhat purposeful overall. But if we go back to 2017, and we had that setup of the dollar turning over and then rates actually came down for the rest of the year. The other thing, the Fed were raising rates all of 2017 and crypto went up.
Yeah.
USM2 went down. So all of the things you would be looking for, they were all in reverse. So what really was happening in 2017 was China had been beaten up by the strong dollar in 2015, 2016, and their economy was super slow. China increased the balance sheet and the Fed lowered the dollar. The Europeans did some QE, and the UK did some QE. We got a near identical setup. The market is over extrapolating tariffs and fears. Whatever rates do is irrelevant. It's what global money supply does, not global money supply, global liquidity does going forwards. We know back in 2017, the Treasury drained the TGA for the same reason. I mean, it's like literally everything is an exact rerun of what happened. So, look, I don't expect an exact rerun this time, but probabilistically speaking, there's nothing to be concerned over. Now, when we looked at that big M2 drop last time around, and this time around, it leads by about 12 weeks. So last time around, we had an identical M2 drop. You can see it. I don't know if you can share that chart you're looking at now, Arthur, that one. So this one shows the near identical pattern in M2 back then versus now. What happened was the dollar weakened, global M2 went up. What also happened is the NASDAQ had a similar correction, crypto very similar. And what crypto did was didn't follow M2 going forwards because it starts to decouple as the bull market takes place. And what happened was it did an 8-day correction and did negative 35%. This time it feels like it's slightly more sideways. Whether it goes a bit lower or not doesn't really matter. But the point being, you're looking for the bottom as opposed to a sharp acceleration from here. But either way, it's over pretty quickly. And then what happened last time around is the moment Bitcoin hit a low, alts took off. And so that's my general thesis on all of this right now. This is pretty much playing out exactly as I've been expecting it to play out. And whether that's in liquidity terms, because it's a rerun, because we've got this debt cycle, it's the same bloody thing, right? So that's my overall view. It's like it's all fine. Financial conditions drive liquidity, and so crypto's been following financial conditions. So it suggests that liquidity comes back. So, but then in the full bull market phase, it normally does decouple. So I don't think it's doing anything unusual whatsoever. And we're now a $3 trillion asset. You need more institutions in to drive the asset higher anyway. People forget that. Like the institutions here, it's amazing. Well, it has to be if you want 100% rise. You need larger pools of capital now because it's a much bigger market. So, and over time, I think yes, we get product market fit. I don't think AI is the product market fit currently. I think that's all narrative based versus the reality of where it is. But look, overall, the trends are all right, and we haven't even got the bloody administration in yet. We haven't got the clarity that we're all waiting for, and everyone's at kind of a max fear right now. It's crazy, but that's a good setup, right? It's just a good setup for the year.
Raoul Pal unveils the banana singularity, capturing the wild crypto market cycle. Bitcoin soars, corrects, and sparks panic before altcoins explode in value. Drawing parallels to 2017, he emphasizes that liquidity, not interest rates, drives markets. Global monetary easing, institutional adoption, and regulatory clarity set the stage for growth. Despite current fear, Pal sees opportunity, a bottom forming before a massive rally. The market's maturity demands patience, with history showing this chaos is just part of the setup for a bullish year ahead. Raoul Pal cuts through the hype, calling out the premature buzz around the metaverse and AI. The metaverse isn't dead, it's just undeveloped, with platforms like Decentraland and Sandbox failing to deliver. On AI, he warns, today's tools are mere macros, not the autonomous agents set to revolutionize 2025. Crypto isn't leading this innovation. Giants like OpenAI and Google dominate. Pal urges us to look beyond overhyped narratives and focus on AI's true potential, embedding viral cultural shifts into our reality. Let's watch more clips from the interview.
I think Ovi mentioning the metaverse is dead on. The metaverse is real. It'll be fucking enormous at some point. But we just bought a bunch of hopes and dreams and it wasn't a metaverse. I mean, Decentraland, Sandbox, it was all terrible, right? So what have we got here? We've got us over extrapolating on the future of AI. The reality, because I spend a lot of time in AI world, is the reality is agents don't exist in AI yet, right? So we don't have agents. What we have is a bunch of macros and plus AI search and a chatbot, right? This is not agents. And to watch Thread Guy and all these guys going, oh my God, this is the future of the world. They are so far behind where AI really is. The technology we're seeing in this token side is 2-year-old technology. So we are not anywhere close to what is about to happen in AI world in 2025, which is full autonomous agents. It'll blow everybody's minds. And it will not come to crypto first because, again, people are like, oh, there's so much money in crypto, 16 billion, that's a funding round for OpenAI.
Yeah.
They have so much density of talent between Anthropic, OpenAI, Google, and Meta that it is laughable to compare us to that. So I think that the risk is here that we've hit peak attention because everyone was bored over December and we've forced a narrative. The narrative over time will be like the metaverse, spot on. Like DeFi was, spot on, right? These narratives are right, but we're over extrapolating, which is why I think it's a mid curve. We're over extrapolating, kind of claiming that we've reached the holy grail within a bunch of degens. And I think Ovi's point, it's the same people. It's exactly the same people who are pushing WIF 6 months ago. And so we're not doing anything different. I spend a lot of time with people like Andy Ellie and stuff like that, finding out really what's going on. What was interesting from him was getting a mimetic to leap from his model to the human conscious and become viral. Okay, that was very interesting. And so, you guys using an AI for REKT guy may be nothing to do with, is it this some sort of agent that people can use? And more is, can it implant virality of mimetics? That's very powerful. That is a proven thing. And it ended up raising capital in this random thing.
Bank of America just confirmed their position of no more rate cuts. Given what you're saying about Trump coming in, rates having to go lower with a lower US dollar, is Bank of America just flat out wrong?
I think rates do come a bit lower still. But as I've said, it's not about the US. Rates went up all the way through 2017. It's not about US rates. It's about global liquidity. That's the single most important thing for people to understand.
Meanwhile, the rise and fall of NFTs reflects the turbulence of the broader cryptocurrency market, a world of rapid innovation, regulatory uncertainty, and speculative frenzies. From the record-breaking $69.3 million sale of Beeple's Everydays to Donald Trump's controversial NFT series, the sector has captured imaginations and stirred controversy in equal measure. Yet, the NFT boom of 2021 feels like a distant memory, with trading volumes plummeting by 97%. Now, as Trump's presidency promises a friendlier regulatory climate for crypto, questions arise. Can NFTs make a comeback, or are they relics of a passing trend? The cyclical nature of markets offers a clue. As Raoul explains, crypto follows predictable phases, a euphoric surge, corrections that incite panic, and selective consolidation. The NFT market mirrors this rhythm, with its meteoric rise powered by the hype of altcoin seasons and a desperate search for regulatory workarounds. Pal's insights reveal a deeper truth. While chaos reigns in the early stages, long-term success requires discipline, focus, and innovation. Yet, the NFT sector remains at a crossroads, caught between its artistic promise and its reputation for scams and speculation. Amid these challenges, some believe the NFT market's survival hinges on its ability to foster genuine connections between digital art and institutions. While most NFTs may fade into obscurity, a select few could thrive, bridging the gap between art and blockchain technology. The road ahead is uncertain, but as the crypto market continues to evolve, NFTs still hold the potential to redefine the art world in surprising ways. As we wrap up, do you agree with Raoul Pal's perspective that Bitcoin and other digital assets are poised for a significant rally in the coming years? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.